I don't see this going much longer because people are being driven crazy. Nobody has any savings anymore. So production is being sucked into oblivion. And eventually when we can no longer produce and we're busy just like making money through basis trade, shuffling paper, and that's where the money's coming from, and nobody's producing anything anymore, then how can this continue? I don't see it.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for January 1st through January 8th, 2024 while supplies last. First this week, we feature backdated 1/4 ounce gold eagles at just $65 over melt. Next, the Armenian 1 ounce silver Noah's Ark coin is $3.49 over spot. And finally, we have a very limited quantity of 1 ounce silver Trump Wanted bars at $3.15 over spot. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is our good friend Rafi Farber from the Endgame Investor, now on Substack. Rafi, thank you so much for joining us today.
Thanks for having me again, Elijah. Good to be back.
Well, it's great to have you today, and yeah, Happy New Year, obviously. It's great to see you in the new year here. I did want to discuss what you've been talking about recently, this basis trade and how it has to do with the repo market, and you've talked about how it could really spell disaster for the financial system. Can you kind of enlighten our viewers, what is the basis trade and why is it so concerning right now?
Well, a basis trade is just when hedge funds or any trader with basically a futures brokerage account, even I could do it theoretically if I had access to the repo market through another broker that has access to the repo market. Well, theoretically, my brokerage does have access to the repo market, so I could access that if I wanted to. But anyway, for reasons of leverage, which are just statutory, there's a price differential between cash bonds. Let's say a 2-year bond you can buy for X amount of money, and a futures you can buy for a little bit. It's a little bit more expensive, like by fractions of a penny. One of the reason is that you can get exposure to the same securities, what's legally the same thing, but you only put up a fraction of the money to get that same exposure. Like, for example, when you buy a gold futures contract, you have exposure to 100 ounces of gold, but you only put up like a few percent margin. I forgot what the exact number is, but it's in the single digits, I think. Let's just say 10%. I don't know. So you have to put up less money to get that exposure. So for bonds, that means that the futures, the nearest future bond contract is cheaper than the cash bond contract. So not the actual cash bonds that you buy, like the paper. So what hedge funds will do is basically sell the futures and then buy the paper to cover. So it's so it's not a naked short. And then they wait for the futures contract to expire, and then it converges on the cash price, and then they are able to net a fraction of a penny on that trade. So a fraction of a penny is not going to get you that much money. So what you have to do is you have to borrow like hundreds of billions of dollars in the repo market and do it over and over and over and over again. And then you can multiply that fractions of a penny by many millions of times, and you end up with, I think one of these hedge funds ended up with a profit of 1.5 billion or something like that. So whether that's all from the basis trade or whether it's just a few $100 million, it's basically free money if everything doesn't crash. Then the thing that could go wrong with it is if there's not enough money in the repo market to cover the trade that they need to cover for that day, then repo rates can jump up to, let's say, what happened in the repocalypse, like 10%, and then all of a sudden their costs of executing the trade exceed their profits from it, and then they have to unwind everything really quickly. And then what happens is like the funds that were short the futures, all of a sudden they have to buy it back really quickly. So the price of the futures shoots up as they have to cover it. And then interest rates on the 2-year go down, but interest rates on the repo go up. And then you have this like jagged action on the yield curve that messes up pretty much every derivative that's based on it, which is like interest rates for everything from renting a car to mortgages, etc. And then nothing makes any sense anymore financially, and the Fed has to intervene.
Now, we've talked about before the concerning developments in the repo market. Can you give us an update on that and really how this plays into the basis trade? Because it seems like, I know we've talked to you before that really the repo market could really just dry up in the next couple months.
Well, yeah, I mean, it will dry up. That's inevitable because the Fed continues to suck liquidity out of the market with its quantitative tightening, which just means it's selling bonds into the market and taking cash and retiring it out of existence. So that means there's less cash in the market. And the reverse repos really come into play here because the reason the reverse repos exist is because the banks can't lend to anyone else at that same rate. Why are they lending cash to the Fed for 5.3%? Because they can't find anyone to lend money to at a rate higher than that. So they can't loan the money, which means new credit can't be created because interest rates are too high. And that's because of quantitative tightening and the money supply is shrinking. So at some point, there's not going to be enough money in the repo market to supply all of these basis trades, right? If you're going to take money out of reserve, if you're going to take money out of existence, if you're the Federal Reserve, sooner or later, there's not going to be enough money. And because the banks can't create new credit on their own terms with their own balance sheets, because we see from the reverse repos that no one's taking any loans, right? Otherwise, there wouldn't be reverse repos. Then at some point, there's not going to be enough cash, and there's going to be something like a apocalypse. It might not be exactly like what we saw in September 2019. It could be that the Fed is already ready, to act on it before interest rates shoot up. But we would see that in the balance sheet. Like they have a standing repo facility where they are ready with their fingers on the triggers to supply dollars to the repo market in case it needs, so that interest rates don't jump up like they did in 2019. But either way, it's not really the interest rates that matter so much as the fact that the Fed will reverse quantitative tightening to quantitative easing. And if you remember, in 2019, around August, September, a little bit before the apocalypse, that is when gold broke out of its 6-year trading range that it was in since the crash of 2013, right? 2013 to 2019, it was stuck in a trading range, and it broke out just before the apocalypse. Whether that's serendipity or coincidence or it's the gold market sniffing out what's happening in the short-term interest rate markets, it could be that. So I would look for a apocalypse pretty soon, probably when the reverse repos run out, and gold is already breaking out of its, what is it now, 3-year trading range if we count the August 2020 top. Let's say loosely 2100, 2150 is a break of that. So we're on the verge of that. And my prediction is that when quantitative tightening ends and we have the next quantitative easing, that'll be the first phase of the money printing, and we'll see gold break out to a new range. And then when it gets really serious and they have to print money outright, that's when gold could really go vertical and the dollar could end, in a matter of months.
And why, in your view, is this the last inflationary cycle and last reversal we'll see before the dollar dies?
Nobody knows that for certain. I don't know that for certain. But if you look at the shape of pretty much any of the parabolic curves, whether you measure that by federal debt deficits or the money supply or the Fed's balance sheet following an exponential curve since 1913, I mean, it's all the same curve. So I mean, at some point, it just gets too high, too fast. And if I can triangulate it with how non-productive society appears to be at this point in our history, then and if we assume, which I do, that inflation and societal sanity, let's call it, are proportional, then I don't see how we can continue to function this way when systems are becoming so obviously corrupt that anything beyond this, if the inflationary system can sustain itself for, say, another 5-10 years, we could get into a situation where we have real global tyranny that looks like, something out of the Soviet Union or Nazi Germany, something like that, all over the world. And that's not a world that I'm prepared to live in. So call it a prayer and me banking on the shape of parabolas, but I don't see this going much longer because people are being driven crazy. And nobody has any savings anymore. So production is being sucked into oblivion. And eventually when we can no longer produce and we're busy just like making money through basis trade, shuffling paper, and that's where the money's coming from, and nobody's producing anything anymore, then how can this continue? I don't see it. At least I really hope it doesn't last another 5 years, because I don't know if I could take it.
No, it seems like we're talking about, and you describe how really the financial system could go bust right in the next couple months with respect to the reverse repo market and the Fed intervening. A lot of people are seeing that the Fed is going to be easing in the next few months here with respect to it, meaning that they're going to bring interest rates lower. Do you think the Fed is going to anticipate something, or they're going to be easing in reaction to what is happening in the financial system?
Well, in its history, the Fed has never anticipated anything. So if they anticipate this, it'll be a miracle. They talk a lot, but they're just a big, focus group or press. What do you call those? A focus group, a marketing firm. They're a marketing firm for the U.S. dollar, for the U.S. economy. They're just cheerleaders. So, given the fact that they've never really predicted anything or seen anything in advance, I don't think they're going to see this in advance. But they could talk about maybe easing, but they're not going to do anything until they have to. But what I can tell you is in Israel, the Bank of Israel already started cutting interest rates, right? It's a special situation here because this is a country at war and things are a little bit more stressed out. So the Bank of Israel appears to be preempting what they probably see as an impending recession, at least here. But if one country is doing it and we are connected to the rest of the Western financial system, then other central banks are soon to follow. But I don't think it'll be because they decide to meet one day in the FOMC and say, we should probably start cutting interest rates because we see a recession coming. You could argue that the first few cuts of a rate cutting cycle are to sort of prepare the path or to pave the road. And that happens a few times, but I wouldn't call that predicting anything, because soon after that rate cutting cycle starts, maybe you could say like in 2006 they started cutting rates, but then, they expect to do it very gradually, like over 5-10 years or whatever it was. But then all of a sudden 2008 happens and they have to cut all the way to zero. And you could say even that in 2019, when the repocalypse hit, they were like a day or two late on preventing the repocalypse. But okay, it was a day or two of interest rates going out of control, but the world still kept spinning and the financial world kept existing as it does. So they stepped in fast enough, and so you could say they technically saw it coming and they prevented a catastrophe. But then 2020 happened and they had to go right back to zero. So they didn't anticipate that. They're not going to anticipate this. Maybe they'll cut once or twice, but somewhere in that rate cutting cycle, they're going to cut right back to zero and be surprised by whatever thing happens that hits the fan, and we don't know what it's going to be exactly.
You mentioned how people are going to be moving towards precious metals, and we are seeing, at least on a technical level, that the chart looks really good for gold. Some commentators out there have been looking at silver and saying, it's been behaving more as an industrial metal, not a monetary metal, and the days of silver being a monetary metal might be over. Your perspective on that, gold versus silver, do you see that silver is still a monetary metal and people will rush towards silver in times of crisis as well?
Well, functionally right now, it is not a monetary metal. I'm not arguing that people actually use silver as money. But the analogy that I use is, and I have this on my Substack in an article called The Myth of Silver Demonetization. Imagine you're on an airplane, how they train astronauts in a zero-G environment, right? They put them in airplanes and then they nosedive the airplane or make it go down really fast at a sharp angle, and then it's like zero G in the airplane. But why is that? Because everything's falling just as fast as you are. So is there gravity on the airplane? Yeah. Does it feel like there's gravity in the airplane? No. So does silver feel like it's a money? No. But is it actually a money? Yeah, it still is. And there is proof of this because 3 times since silver was demonetized in 1873, 3 times since then it has returned to the original bimetallic ratio with gold, which was 15.5 to 1, something between 15 and 16 to 1 historically. I don't remember the exact number, but 3 times it's happened, right? In 1919, post World War I. It happened in 1968 when the London gold pool fell apart, and it happened in 1980 when there was a dollar panic. So that means that 15-to-1 ratio means that the public is returning to silver as money. And why would that be? Well, there's really no need for silver when you have a functioning gold derivative. Let's say that we had the perfectly honest Federal Reserve or whoever to manage the dollar, and they printed it one to one at a constant ratio with the gold that was mined, and everything was 100% honest and perfect, right? So then there would be no need for silver as a monetary metal at all. You could just use the dollar derivative, the gold derivative. But when the people start to suspect or understand, that the gold derivative is not honest anymore, then yeah, they will buy gold, and they will also buy silver, because if a gold derivative doesn't work, you're gonna need silver for retail purchases, because gold coins won't work. And I'm not saying that it's like the average grocery shopper, retail level grocery shopper says, oh well, I have to buy silver now. This happens in the plumbing, in the deeper recesses through the Fed's balance sheet. But basically what I'm saying is that whenever there is a dollar panic, and because the dollar is explicitly a gold derivative now, even though statutorily it's not, but functionally it is because of the regression principle, and if you've heard me speak about that before, you understand, then once the trust in gold goes, the rush to silver begins. We've seen it 3 times. We'll see it again. Exactly when, we don't know. But the point is, what's the endgame ratio? The endgame ratio is the 15-to-1 gold to silver ratio. That is a monetary panic, no matter what the dollar numbers for these metals are. Once we're at 15-to-1, that's the bell. That's when you got to start spending.
And how do you see that working? Because a lot of people, I guess, when they are asking about purchasing precious metals, this is a concern of theirs, is how do I spend it, right? In your perspective, what would be some of the best forms of precious metals, and silver in particular, as you mentioned, to use in a barter? Or I guess barter is kind of a strange word. It's more of that you're actually spending real money, right? In that kind of scenario.
Yeah, so you have to get that out of our heads that once we reach a 15-to-1 ratio again, not exactly 15-to-1, I'm not saying wait for that number and then spend everything, but once we get closer to it, like 25, 20, you start spending. At that point, I don't think the dollar is going to be acceptable in commerce, really. Maybe in the same way that maybe a peso in Argentina is acceptable because someone's going to exchange it immediately for dollars. Like a dollar might be acceptable because somebody who's going to accept it is going to exchange it immediately for silver. But you'll want the silver directly. So yeah, it's not like you were going. The point isn't to buy silver at, let's say, $25 and then sell it at, I don't know, whatever, $300, whatever it's going to be, and then take the dollar profits and then you're going to be rich, right? That's not going to be the environment. The environment is going to be when nobody wants dollars. So who cares about what dollar profits you're going to make? You want the stuff so you can buy things for your life. Right? We're not going to be exchanging them back into dollars. We're going to be buying things with them because they are money. So then what is the most recognizable form of money? It's probably going to be constitutional 90% junk silver, because people will still recognize dollars. They'll recognize half dollars, quarters, dimes, those kinds of coins, American. I mean, if you have junk silver of your local country, then probably if I know in Australia they had silver coins until 1966, so you want to get those, and those have very low numismatic value, which I think is good for spending money, because numismatics are basically art, and there's nothing wrong with art, but you're not going to be buying food with art. You're going to be buying food with money, and so I would get away from numismatics. If you collect them, that's fine, but I know you're collecting art. And bullion coins, preferably of your country, but I'm sure that 100% bullion coins of any nationality will work in an emergency. I don't think it's going to be that much of a problem.
Now, for 2024, I know a lot of people are seeing the geopolitical conflicts around the world. For example, where you live in Israel, the war there is very concerning. If you wanted to give us an update on this, people who are looking at these wars, these conflicts developing around the world, and I know the US and UK, we talked with Mario and Neko, are just getting involved in another conflict there. So your perspective on that, and one of the things that you've mentioned is, if the end game comes sooner, then that actually prevents a lot of these, more involvement in these wars. So, did you have any kind of an inside look into that? How it's happening right now?
Well, what's happening in Israel, and I don't really know exactly what is happening because I don't trust what I read, but I can tell you what I read, and you can either take it at face value or assume it's all lies. But they keep extending the timeline here of how long it's going to take for them to achieve their objectives. I don't know what their objectives are. I'm dealing with questions from friends of mine who have kids that are being called up, like 18, 19. Sorry, no, just after the mandatory 3-year service. So it's like 22, 23-year-old kids that are going to be called up for their first reserve duty and go into the Gaza Strip. And I've gotten a lot of pings on WhatsApp saying, do you know any lawyers that can get them out of this? Because I don't see any purpose to my kid going in there because, if there was like a goal that they could communicate, then maybe I would. But like, what's the point? And then you have the Ramat Kal, the general chief of staff of the Israeli army, saying, "Oh, the war is going to last many more months. It's going to last all throughout 2024." And it's exhausting because every day I wake up and there's more deaths, and I'm asking myself for what. And I just had news that there's an Iranian destroyer ship heading over to the Red Sea, challenging America, who's challenging the Houthis. Things are definitely heating up, and it's not very comforting. It would be if there was a goal that I could understand, but there isn't, other than just fighting. So I see this going on for a very long time until the money runs out. And hopefully the money runs out before some big bombs are dropped somewhere that will kill hundreds of thousands of people, God forbid. That's what I know. It's nowhere close to over. Israel's not going to back down anytime soon. And Hamas are just guerrilla warfare. So that can keep going. As we know, guerrilla warfare never ends until somebody gives up on the other side.
For 2024, do you have any specific preparedness steps that you would recommend to our viewers?
So not specifically for 2024, but I keep saying this, that you want to know who the people are that you can trust that have what you need. If you local farmers, know who they are, let them know that if the currency doesn't work, they can come to you and sell you food. Know who the people in your immediate area are who have skills, who have carpentry skills. They can build things, they can fix things. They're going to be very useful. And get to know people who are armed and live among like-minded people. I'd say get out of cities, get out of Manhattan, get out of Chicago, get out of LA. Because when the end game hits and you're stuck there, it might be very, very difficult, if not impossible, to leave. Suburbs are less dangerous, but just basically know the people in your circle, make friends with them, build a local community, and don't go broadcasting that you have gold or silver. I mean, I'm in a special situation because this is my living. I have to tell people, so I can't really hide it. But talk to the people you trust, talk to people with skills, talk to people who have moral values, whether those moral values come from just an innate sense of morality or from the belief in a higher being. Those are the people you want to be around. I would say like one of the safest communities is probably like Boulder, Colorado, among the Mormons or the Amish. I mean, those will be the people you want to know. I'm sure the Amish community will get through this pretty well, and so will the Mormons.
All right. Well, Rafi, we really appreciate your time today, as always. Stay safe there, and we're continuing to pray for peace in your region. Thank you so much. Any last thoughts before we let you go, Rafi? Prayers are always helpful. Not just for affecting heaven, but for our own sanity. Sometimes we just don't know where to turn. We don't know what's going to happen, and sometimes there's no one to turn to. So
pray. And look, that's why I'm glad to talk to people like you, because I know you have these values, and look, a lot of us do. If you're a stacker and you understand what real money is, you have at least a basic grasp of reality, and that filters down to a lot of your other values in life. I would assume it's a lot of people. Most of the people that I know that understand that gold and silver are at least important to have, or even understand that they are money. They understand a lot of other things about life too, like, there are two genders, and to use an extreme example. So these things go together. We've got a good group of people. It's just we got to get to know each other, and that's what we're trying to do.
Always appreciate your time, Rafi. Thank you so much, and Happy New Year.
You too.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for January 1st through January 8th, 2024, while supplies last. First this week, we feature backdated 1/4 ounce gold eagles at just $65 over melt. Next, the Armenian 1 ounce silver Noah's Ark coin is $3.49 over spot. And finally, we have a very limited quantity of 1 ounce silver Trump Wanted bars at $3.15 over spot. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.